Very often I get asked, which is the best capital to start with? So how much money you're supposed to be allocating to your trading at the beginning. And in today's video, that is exactly what we will be speaking about. So I suggest you watch the video until the end because I will be answering some very important questions. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so first, what I will be doing is telling you how much money is best to start with, and then I will also share a full breakdown for NZDJPY, which is a very interesting pair to follow, and I will show you by the end of the video which kind of capitalizing opportunity we can be looking at on this pair. So let's start by the first question, which is how much money you're actually supposed to be starting with, and the easy answer to this is zero. In fact, at the beginning, you're not supposed to be focusing on money at all. Your main concern is supposed to be developing a profitable strategy. Only after you have properly backtested a trading strategy and proved it profitable, then you can move to demo trading. So again, still zero money. So now that you are demo trading, the goal of trading with a demo account is to become consistently profitable on a demo account. If you're not profitable with fake money, what makes you think that you can be profitable with real money, so with a live account? If you're not profitable on demo, you will not be profitable with a live account. So after you have developed a strategy, move to a demo account and trade your way to consistency with a demo account. Because it's true that if you are not profitable with a demo account, you will never be profitable with a live account. But it's also true that just because you are profitable with a demo account, you will be profitable also with a live account. It's not true, okay? You can perfectly be profitable with a demo account, but not be profitable with a live account, because when you're trading live money, so real money, you let emotions come in. And I will now explain also how you can avoid that. So first, backtest a trading strategy. Then move to a demo account and trade your way to consistency on a demo account. Become consistently profitable with a demo account, and only then, after that, you can transition to a live account, so real money. And how much money you're supposed to be putting on your account at that point? You have to put enough money that you feel psychologically in the market, okay? So that basically you feel the losses, okay? That is very, very important, because otherwise, if you put too little money, then it's like demo, right? You don't really care if you lose or if you win. So you can't simulate emotions. But if you put enough money in it that you actually feel emotionally impacted when you lose, then you can start training to control your emotions, because something that you can't demo, okay, that's something that you can't feel on a demo account is having emotions, okay? So you need to have enough money for you. That is why I can't give you a precise number, because it's for you. How much money is enough for you to feel it psychologically when you actually lose? And then your job there is to control emotions. Once you are live trading and you don't feel emotions with an amount that in the past you were feeling emotions with, and you are consistently profitable, it means that at that point you have completely disconnected your emotions from your trading, and at that point you can put as much money as you can in your account, because in the end it's a game of percentage. So the more you put, the more you will make, obviously, if you have a profitable strategy. So that is the complete answer to the question on how you're supposed to be approaching the funding of your trading account. And now let's make a full breakdown on NZDJPY, which is a very interesting pair to follow at the moment. Let's start from the weekly. Now on the weekly time frame, the market has created this W formation. Now if the market creates a W formation, what do you expect next? You expect the market to show a retracement. Specifically, you want to see the market make a move to the downside to retest the previous resistance, now turned support, which is the neckline of the formation. So the previous resistance, which is now turned support. This is the completion zone of the pattern. Now in this specific case on NZDJPY, there is one major thing that you have to notice. The market has very strong support also here. What does it mean? It means that this level is actually a historical structure level for NZDJPY, acting as support here, resistance here, and now support here, and we want to see the market go and test the zone. What we had also said in our trading view analysis was that after this huge move to the upside, the market had clearly approached a strong supply area. And I will now show you which is the zone that I'm speaking about. But first, let's just put a horizontal level here, which is our downside target, to keep the charts as clean as possible. This is our downside target at the support that we see here. Perfect. So which is the supply area that the market had reached? This one here. Why is this a very strong supply area? Because before starting all this huge impulse to the downside, there are three candles which are not related to this move to the downside, which are these three green candles, meaning that the market had shown a reaction to this level, so created a retracement before this huge move to the downside. So this is a strong supply area, strong resistance area for NZDJPY, and the market had approached it with a very nice W formation. That is why when the market was here, what did we say on TradingView? And by the way, I will link that analysis in description. We said from here, we definitely want to see the market make a shift away from the area. And that is exactly what the market has done. Specifically, we said something even in more detail that I will now show you. Let's go down on the daily, okay? What kind of situation we have on the daily time frame. Now on the daily, in that previous analysis, which I really suggest you go and check, what did we say? We said from here, we want to see the market make a move to the downside. However, we must realize that this zone here, in which the market created this channel, is this supply area, okay? Is strong structure. So until we will see a clear break below the area, we can't be looking for any shorts. And in fact, we wanted to see a break, a retest, and a continuation to the downside. And that is exactly what the market has done. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. Now that the market has approached the low, we are seeing the market reject the zone, which brings the opportunity for a very nice move in the market, which I will now speak about, which will provide possibly the opportunity to be looking for a beautiful short from the high with a very good risk to reward to the downside. And I will now go in detail to speak about this opportunity. But first, let me show you something. During this move to the upside, okay, during this huge impulse on the daily, what did we see? We see that the market rejected the zone to the downside, which is our target to the downside. If you remember, this horizontal structure is the target that we had already identified on the weekly. So our downside target remains here, which is confirmed also on the daily as structure. So it's a very important zone to which we expect the market to go and grab some liquidity. Now, before showing you what we have to look for on NZDJPY for a possible trading opportunity, let's give a quick check at what we have from a COT perspective. So commitment of traders, what big banks and institutions are currently doing in the market. So the COT data. If we go and see what we have on the NZD, we can see that with the last report, they have closed 10K shorts, so a massive amount of shorts, bringing shorts at 16K, which is one of the lowest values that we had for a long time. We had 37K here. We're currently sitting at 16K, so a big decrease in the shorts. And longs have increased from the 6K that we have here all the way up to 14K. In fact, net positions have massively increased all the way up to minus 1.9k. So we still have more shorts than longs. However, we have seen a clear increase from the minus 20k that we had here all the way up to the minus 1.9k with a 60% short exposure and 52.9. So numbers are getting quite close. And that is why we have seen all this huge movement to the upside, because clearly NZD has been getting stronger because hedge funds have been shifting their positioning to the long side, as we have just seen. However, this doesn't mean that we can't be looking for a deeper retracement, considering that if we check the data for the JPY, what we can see is that on the JPY we had a huge shift, bigger than on the NZD. We went from having minus 56k net positions all the way to the 22k that we have here. So from having way more shorts than longs to having way more longs than shorts, with 43k longs and 21k shorts. So how we will be approaching NZDJPY with students. Now on the weekly, as we have already seen, we want to see the market show us a deeper retracement to this level. On the daily time frame, we see that the market is currently at daily support here. So obviously we can't be looking at a short from here. However, what we can be looking at is if the market will make a nice move to the upside, what we will have a daily W formation, and after a W formation you expect the market to make a move to the downside. We will have a daily W formation ending up exactly in the supply area from the weekly, which is also the completion zone of the weekly W formation. So everything will be in confluence, in this case inside of the zone, for a nice move to the downside. So the way in which we will be approaching this is very simple. With students, we will be monitoring price action inside of this area from a 4-hour perspective, because always remember, monthly, weekly, and daily are for direction. The 4 hours is for entry. So when the market will approach this area, everything on the 4 hours will be bullish. So we have to wait for the market to shift from a bullish market to a bearish market from a 4-hour perspective. And only after the market will have done that, then we will add NZDJPY to watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, because we will have a bearish pattern on the daily, bearish structure on the weekly, and bearish pattern on the weekly as well. Everything combining for a nice move to the downside. And we will just have to wait for the 4 hours to actually confirm that it wants to make the move to the downside, because obviously if everything on the 4 hour remains bullish, we can't be taking for the short, because we will be shorting a bullish market, which is never a good idea. That is why trading is reactive and not predictive. You can wait for, you can do the best analysis in the world, put all the confluences on your side, but then you anyway have to wait for the market to confirm your analysis and show you that it actually wants to respect it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you a complete market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, and I also answer every single question that you have every day, including the weekends. So it's a very complete program. I suggest you go and check it out. The link is in the description, or I will see you in the next video.